Hello everyone and welcome to your Glassnode video report for week 4 2023. Now what we're looking at this week is this current rally that's pushed us up above 23,000, and what you may find when you look at market psychology and the way that these things happen is that higher prices initiate more sellers. The higher the price goes, the more people find that price attractive, and strangely enough that works to the downside as well. The lower the price goes, the more people eventually capitulate out, and market cycles eventually turn around. So every uptrend turns into a downtrend and vice versa, obviously over multiple time frames. So what we're looking at in this particular session is who are the different cohorts that are participating in this, who are the ones who are actually taking this is an opportunity to shore up their balance sheets, and who are actually just sitting tight, saying that the conviction remains high. So we're going to break this down to different cohorts and look at this from a few different angles. So as I mentioned, higher prices tend to motivate people to become sellers. This is just the nature of the beast. This is how markets tend to operate. So what we're going to use is the Onchain tools to try and assess who is actually participating in either the exit liquidity side, who is not participating, which by proxy means that they probably have a degree of higher conviction. We're going to break this down into three key cohorts. There's the shorter term, newer investors, there's the longer term folks, and then we're also going to look at the miners because they've obviously been a fairly key and instrumental component, both on the supply side, being the cost of production, but we've seen them go through a remarkable amount of stress of late. So what we're actually seeing is that miners are starting to get a little bit de-stressed. We saw this over the last couple of weeks. So we're going to assess it from those three different cohorts. We're going to look at it from the perspective of pricing models. I really want to introduce this concept of profitability. This is a really, really important topic. It is foundational to Onchain analysis, and we are going to be covering this. I mean, you'll see it in most videos. There'll be a degree of profit and loss. But it really is a powerful tool that not enough people really take seriously, but there is the edge involved in those. So anyway, before we get started, please do give us a rate, a share, and a subscribe. It helps this channel get to more people. As always, please let me know if you have any comments or thoughts in the comment section below. I'm particularly interested in understanding how you're using these tools. We did put out a poll yesterday, which we'll have a link in the description below. Which please do give me your answers for that. But we're trying to understand why you actually watch these videos, and a huge majority of you are saying to actually learn the on-chain side of things, which is fantastic to see. What really helps me is understanding how you're taking the knowledge that we're doing and covering in these videos and our reports, and then taking it across and actually using it within your on-chain analysis itself. So obviously what we're trying to do is help people understand how to use the tools and find maximum advantage from the suite of on-chain and really the tools that are at our disposal. But anyway, let's get started and jump into the analysis. Okay, so here we are in our week on-chain 4 dashboard. As always, you'll find a link to this in the description below. And what we have seen is a pretty powerful set of candles. We've seen several weeks of very, very strong price action, which has more or less erased and some all of the FTX disaster. So, just purely from a psychological perspective, and we covered this last week, looking at the 200-day moving average that we broke above and the realized price, this is a key technical and on-chain model. So psychologically, we've essentially taken back all of the FTX damage. Price is now above two very, very important, widely observed and psychological levels. And really, those are pretty much as simple as it gets in terms of saying that this rally, at the very least, is different to the previous ones that we saw through 2022. There is something different about this rally, and it comes from a psychological perspective. So that's why we're going to be studying this in a lot more detail. So where we're going to start is with a pricing model. Now, this one here, we're looking at the investor and the delta prices. Now, these are typically engaged towards late-stage bear markets. The delta price is trying to capture a bit of a blend between an on-chain and a technical model. It typically shows up towards very, very late-stage bears, typically around the very bottom. We've seen it in 2018, 2015, and in 2012, we saw it actually get engaged at the lows. And then we have the investor price in green. Now, this one's particularly interesting. The investor price is the realized price, which is the average cost or the average cost basis of the market. And then what we're doing is we are subtracting the thermocap. Now, that's the coins when they were mined. So what we're solely looking at is coins that have transacted after a miner has mined them. So that's kind of the circulating investor. That's why it's called investor price. It's showing the coins that have been spent into the economy. They've left the miner wallet and they're now out there and circulating. Now, the other model we've got shown here in the orange is called the compression model. Now, what we're looking at here, as you can see, in late stage bear markets, price tends to trade into both of these pricing models. In 2018, we traded here below it, and through our current bear cycle, we traded through it for several weeks. I think it's about 2.5 months that we actually spent below the investor price. Now you can see that this compression model is essentially tracking how close we are getting to that band, as well as how squeezed together those two price models are. And you can see we generally get to a very, very similar level of stress in each bear cycle. So it's kind of showing that detox of the market. It's showing that the price has come down to a level that is essentially coincident with the cost basis of everybody who's spending coins. So it's kind of showing that detoxification, the flush out of the speculation, the return back to a degree of, equilibrium, so to speak. So we can see that the level of compression across all of these cycles has actually reached a very, very similar level, and it's giving us an indication of that detox over the time of a bear market. Now, I mentioned in the intro that we're going to be looking at profitability, and this is such an important topic. When we talk about profitability, we're talking about two different baskets. There's the unspent or the unrealized profit and loss. This is of all the coins that are out there that people are holding. If they bought them and acquired them at 15,000, we're currently at 23,000, they're holding an unrealized profit. Likewise, if they bought at 23 and it's at 15, they've got an unrealized loss. There's then the other side to this, which is the realized component. Someone actually spends that coin that was in profit or loss and locks in those gains or losses. So we bucket them out into two different categories. But what we're looking at here is the percent supply and profit in blue. And we've color coded it using our workbench tool. It's like an if-then statement. We've color coded to actually map out critical areas where the percent supply and profit hits certain thresholds. Now, in late stage bear markets, when we break below 55%, that means that 45% of the supply is in loss. Typically, we see these low values in late stage bear markets. Likewise, in bull markets, naturally, when we're at all-time high, it's 85% up to 100% at all-time highs, and we start to see this show up in the green. Now, what we're really looking at here is just macro transitions, because remember, you can use Onchain for both zoomed in and for zoomed out analysis. Here, this is a bit of a zoomed out model, giving you a bit of a navigation tool. Where are we in this entire cycle? Now, the really, really important thing I want you to take away, if you can see on the right-hand side here, look at the power of this move. We have seen the percent supply and profit rally from 50, let's say 50% up to 67.8%. So let's just round that up to 68%. We're talking about 18% of the supply has suddenly returned to profit. Now, there's a couple of other instances where we've seen these very, very vertical moves when it comes to percent supply and profit. Now, remember, based on our previous price chart, we've really just reclaimed the FTX zone, and we're kind of not quite at the top of the range, but close to the top of the range of where we were since June. So we're really looking at the last 6-7 months of trading action, and we have seen 18% of the supply move back into a profit. Here we are in 2018, where we saw price go from about 3,500 to 4,200, and we saw a very similar vertical move. Here in 2015, as we broke out into this miniature parabola, we saw a very, very large increase in percent supply and profit, same as we came off the bottom here in 2012. What that's telling us is how much coin volume changed hands over the last 7 months. If price is 1 cent above that acquisition price, it's now going to be deemed to be in profit. So when you see these large vertical moves in percent supply and profit, it's showing you something. And this, by the way, works to the downside. Look when we get to tops, look how violently this thing pulls back. It's a lot less violent on the way up because people are still accumulating, coins are changing hands, but not quite as much. Once you get to all-time highs and people start spending en masse, these violent drops as you get these price pullbacks is showing you how many coins are now top heavy. Too many coins at the top creates a bunch of sellers when price goes below, and you get that reflexivity to the downside. What we've seen here is more or less the same, but on the other side of that equation. We've seen a bunch of coins change hands, somebody capitulated out, somebody else had to step in and take those coins off their hands, and now we have 18% of the supply that's now back in profit. So we're seeing that kind of changing of the hands, but it's showing us something about the foundation that was poured below us. Now, in terms of actually hammering out that bottom, what we've looked at here is the 7-day sum of realized profit and loss. So in order to actually have this 18% supply, you need a bunch of folks to panic and capitulate out, and someone else who's a little bit braver to step in and actually go, well, I'll step in front of that train. And what we've seen here is that back in June, we saw a major capitulation event, significant. 0.03% of the entire market cap was flushed out in a single day. And then we have the same event here during the FTX collapse. These are enormous. Now, what we've looked at here is this is normalized versus market cap. So when we normalize things by market cap, it means that we can compare previous capitulation cycles to our current one. And you can see that the June sell-off was worse than March 2020. We can see that our recent sell-off here when FTX blew up was as bad as March 2020 and as bad as 2018. We've had this major capitulation event. But likewise, somebody had to step in and actually take the coins off their hands, because for every buyer and seller, there's the opposite side of the equation. So this is kind of giving you a bit of a view of how we can visualize investors making a profit during the bull, making significant losses during the bottom, and the result of that is a large proportion of new buyers have returned to a profit on this rally. So now we're going to zoom in and look at those on a few different categories: short-term, long-term, and minors. Because as I mentioned at the start, higher prices create sellers, because the more the price goes up, the more people go, oh, you know what? I quite like that price. So what we can see here is the percent supply of short-term holders in profit. And what you can see is that the level that we have reached, we haven't been here since the all-time high. The amount of short-term holders in profit is just shy, 92% of all short-term holders. This is demonstrating how much of that coin supply was recently sold. A new buyer has come in and they're now almost entirely in profit. Less than 8% of them are down. And the last time that we saw this was at our all-time high. Now remember that bull markets, we will obviously see this when we hit all-time highs. This will sustain for some time. But also when we get these exit rallies, it's just that extra time to say there's a lot of investors who've suddenly found themselves in profit. And thus the thesis, the assumption here is we go, okay, so there's a higher risk that some of these shorter term holders are probably going to start spending. How do we investigate that question? So the first thing that we can look at is looking at our spent volume age bands. Short as SVAB. We've got this here on a 30-day exponential moving average. And what I really want to highlight here is note that these coins here, they're kind of warmer colors. They're not quite purples. There's kind of some purples. The purples are multiple years old coins. These kind of orangey colors are months, 3 months, 4 months, 5 months. They're in that short-term holder cohort. And you can actually see up the top here, these are just a couple of days. People who've just entered over the last couple of days to weeks. Note that we saw a very large push higher. You can see actually over on this bar chart over here, we've seen that there's been a large push higher of coins that are weeks to months old. So what we're seeing is that as we've seen all of these short-term holders return to a profit, we are actually seeing them starting to spend those coins, which is telling us we've got a thesis. It's likely some of them are going to start spending. The question is how much, and this tool is now giving us a bit of a gauge. So, okay, they actually are spending. Now, there's another toolkit that I want to jump across to. So this is a brand new dashboard that we've just rolled out for Bitcoin. You'll find it called Realized Profit and Loss. This one, I think, contains some of the most important metrics. Certainly, this is almost my bread and butter. There is another one coming that's going to look at the unrealized component very, very soon. That's currently in the oven. But this realized and unrealized profit and loss, I would say for me personally, it actually makes up probably about 50% of my analysis toolkit. I use this stuff all the time, and I find that it's really, really powerful for describing this problem that we're looking at. Are people exiting? Is it overheated? Is it just kind of day-to-day spending? Helping us classify, are people actually selling into this rally or not? So what we're looking at here is the coins. If someone bought their coin up at 50,000, they're selling it at 20,000, they're realizing a loss, about $30,000 times the coin volume. If we're looking at someone who bought at 6,000 and is now selling it at 23,000, that's going to realize a profit. Now, there's a few ways we can break this down. If we look at this in terms of the net, this is taking profit minus loss. This is great for spotting the scale, the dollar value of how much on net was flushed out of the system. You can see that capitulations stand out and market peaks stand out. Very, very high values in dollar terms. Now, we can also look at the components of those. You can see that we've been in a loss-making regime, and you can see that this actually started, this losses started back here in 2021, quite early on. This was giving us a sign. These massive red wicks is showing us capitulation events, but you can see this has been a loss-dominated regime. Conversely, the start of the bull was a profit-dominated regime, and that has been declining and declining. Here we are with some profits being realized. Now you can see here the scale of it. The scale of profits being realized right now is not dissimilar to these rallies that we saw back here during the 2019 bear and also during the 2018. This is kind of the final sellers who saw price falling. Even though I'm in a profit, just get me out of this thing. So you can start comparing how the dollar value actually compares to previous cycles on the realized profit. When we look at it on a ratio between profit and loss, we can start to break down what the actual balance is. Are we in a profit-dominated regime, a loss-dominated regime? And as you can see here, this is on a 7-day EMA. We have broken above. So again, it's time to start paying attention. Some people are taking profits, and we've got this momentum to the upside. So what you can see from this dashboard, and note that there's a whole stack of guidance. We're looking at SOPA models and dollar values. We've broken it down into different cohorts, markets, short and long-term holders, and then also broken it into macro yearly cycles. So you can see how much profit was taken during the bull and then how much the market gave back during the bear, and then create some pretty funky looking oscillators that come off the back of that. So this tool is really bread and butter. It helps us understand how people are spending. Are they taking that exit liquidity? What does that look like overall? So this is a really, really powerful tool that we've just rolled out. And as I said, there's an unrealized version of this that will be coming in the very near future. As always, if you've got any questions, make sure to grab me. More than happy to answer. Let's get back into the action. So now we're going to transition and look at the long-term holders. These are people who've held their coins for more than 5 months. I occasionally get questions, people saying, hang on, 5 months isn't long-term. Well, what we're looking at here is based on statistics. So we've actually looked, and again, I'll link in the show notes below a link to this actual research piece. What we have here is looking at all of the spending that goes on for Bitcoin, all the spending that's happened over history, and we've done this by year. We've done this over several different iterations. What is the probability that a coin is spent based on how long someone's held it for? And what we find is that after 155 days, right, plus or minus, depends which kind of year you're looking at, but on average, if you look at this thing over a long time frame, around 155 days, coins become extremely unlikely to be spent. So that's where the heuristic comes from. It's actually from a statistical background. We're looking at all the spending that's happened through history and breaking it down into what is the probability that those coins are going to get spent. And after 5 months, it diminishes immensely. Short of 5 months, that's where most of the daily transaction activity is. So what we've got here is the long-term holder MVRV. This is looking at the profit multiple held by long-term holders. Now, I mentioned at the start that this rally is a little bit different because we're above some key psychological levels. Well, breaking above the long-term holder at 32,200, we are seeing that above the long-term holder realized price, we are in the process of breaking above that as we speak. So what we can see here is that the long-term holder cohort, these are people who have held their coins for a significant period of time, they are now returning to a bit of a profit as well. Now, if we zoom out on this metric and look at it on the full time history, you can see that this is typically a macro scale oscillator that trends down quite low. During the course of this bear market, the people who bought early in the bear actually become long-term holders, and you can see that their profitability collapses. And you can see how quickly all the folks in 2018, price went sideways, but look at their profitability just collapse. You can see here in our 2021 cycle, here's our all-time high. Price is at all-time high. And look how much that cohort has moved into a loss. It's quite remarkable that we've seen a huge portion of these investors fall into an unrealized loss as the bear market rolls on, which, by the way, this lower high here is a good indicator that this particular high just didn't have the juice. There was too many people in a loss. We saw a very, very top-heavy market, but we can explore that more in more detail. Now, just before I tick on and before I jump across to this old supply net position change, some of you looking at this, the long-term holder MVRV, I do have a treat for you. So what we have is a brand new dashboard called Pricing Models. As you can see, we've been hard at work rolling out new dashboards. And what we've got here, this is available to all advanced T2 members. We're really trying to focus to make sure that you guys have got the edge because we know that you're watching these videos, and we want to make sure that you've got the tools to help navigate all these market conditions. So what we've got here is a suite of models looking at the short-term holder cost basis. We've got the long-term holder cost basis down in blue, comparing it to the orange, which is the realized price. Now, what's really important to note here is that as we get into late-stage bears, note how all of these cost bases converge to approximately one price. During bull markets, they expand. Short-term holders follow the trend. Long-term holders are buying and holding for the long term. And we've got the average of the market and the realized price between the two. But in late-stage bears, they all converge. What we're seeing here is a compression of cost bases, a rehomogenization, or everyone, no matter how long you've been in this space, long-term, short-term, yesterday, 5 years ago, if you take an average across all of those entities, they're all pretty much in the same spot. So what we're seeing is that compression of all those users back towards a very, very homogeneous, hodler-driven market. And we typically see this cost basis convergence towards late-stage bears. Now, from that, we can then divulge the young supply realized price and the old supply realized price, and the MVRV that comes with it. So what we can see here is that we have the MVRV that shows those very same macro cyclical events and the very steep decline. As we get to the blow off top, a very significant decline in long-term holder profitability. And if we zoom in on our last couple of years, we can see that here we have our April all-time high, and here's our November all-time high with that same negative profitability bias. We've seen there's a whole lot less long-term holders in profit up here in November. We have a large-scale divergence. Even though we had a higher price, fewer long-term holders in profit. And what that means, you've got more of these folks who are sensitive to downside price action. And naturally, we also have the short-term holder variance. So we can see here the short-term holder MVRV, which again is a lot more volatile, but it shows what's going on in the more shorter-term behavior patterns. Anyway, just wanted to kind of give you a bit of a snapshot of those. These are all available to our advanced members, as are the vast majority of models within our pricing model dashboard. Let's get back to it. So whilst we're seeing those long-term holders returning to a noteworthy profit on average, what we are also seeing is that their supply, the supply that's older than 6 months, is currently pushing up to an all-time high. So it's in the process of getting up to, what do we have here, 15 million coins older than 6 months. And you can see that we are in a positive regime of about 200,000 BTC per month maturing across that 6-month threshold. Now, what's really important to remember about this particular model, when we're looking at older supply, what's important is that in order to get to that 6-month threshold takes time. So what this oscillator here is looking at, this is kind of like the long-term holder net position change. We're looking at this a little bit in past tense because the coins that are flowing into this 6-month boundary, that takes 6 months to happen. So these are coins that were actually accumulated 6 months ago. Now, the converse is true when they're spent. So this model, when it turns red, is actually more important because when it turns red, it means that those coins that are already 6 months are being spent and it's overwhelming all of the coins migrating across that boundary. So we're seeing a disturbance of that equilibrium. So red values here actually means that the spending is immediate and it's happening overwhelming the maturation. And conversely, when you're looking at maturation, that will take time. So the green bars, we're looking a little bit into the past. Red bars are immediate. Just a bit of edge there when you're trying to understand these models. Now, the last one that I want to look at is miners. So what we've seen is that short-term holders appear to be spending. There's profits being realized. We are seeing a bit of that exit liquidity. Meanwhile, coins that are older than 6 months seem pretty static. However, we're just at the point of breaking above long-term holder cost basis. So that's we're potentially going to start seeing that behavior change. So we've got a couple of models there to pay attention to. On the mining front, we're looking here at the Puell Multiple. Now, Puell Multiple is looking at their mining revenue across the whole industry and looking at it compared to its yearly average. And what we can see is a massive spike. This is about a 240% increase off the bottom. So relative to the last year of income, miners are actually finally getting a breath of fresh air. Their profitability is now quite significantly improved. And as a result, what we can start to expect is miners may take this opportunity after seeing such a horrendous bear market where stock prices got absolutely slaughtered. They may well be looking to shore up their balance sheet and taking this exit liquidity where they can. And if we then look at the miner balance chart, we can see that they have in fact taken some of those coins off the table. About 5,000 BTC spent over the last week. They are using this rally as an exit liquidity opportunity. But remember, this is part of the process of market cycles. What we're looking at here is gauging the overall investor behavior. What's really useful is to break it into different cohorts. And importantly, as the market starts to actually process this, what you're looking for is we know that there's always, for every price, there's somebody who's going to be a seller. What you're then looking for is who they are, how you categorize them, which cohort do they fit in, and are we seeing sufficient demand? Is there enough on-chain activity? Are we seeing that overall transaction flows are picking up? Is there enough demand to push through it? Or do we start to get it overwhelmed? Does that start to create realized losses? And we can start to glue multiple of these puzzle pieces together to build a more holistic picture. Anyway, hopefully that gives you a nice overview of the three different cohorts, short-term, long-term, and miners, and how they're essentially considering and operating with this current recent price action. So thanks as always for tuning in for that session, folks. Hopefully you found that useful. We are rolling out these dashboards, and they are pretty much all available for advanced members. They are designed to help you understand what's going on and try to use the right puzzle pieces in the right place. We're going to be covering all of this over the course of this season, and also we're in the process of developing a series of other educational content to really help you understand what's going on and using the right tools at the right time. As always, you can reach me in the comments. Let me know if you have any questions at all. And please do check out the new pricing model and realized profit and loss dashboards. They really are quite powerful. It's, me personally as an analyst, it's actually where I spend most of my time in those dashboards. So anyway, I'll catch you in the next one. See you then. Cheers.